What's up, everyone? It's Caddy with Money Investing, and markets here selling off pretty aggressively. We've got the S&P 500 down a little bit over 1.6%, the Nasdaq also down 1.6%, and the Dow Jones, well, also down over 1.6%, sending off 530 points down on the day, with the yields also rolling over. So we were live to cover the entire speech from Jerome Powell, and we were live to cover the entire statement and the SEP as well. I'm going to give you a very brief summary of that in this video, and then in a separate video, I will be going over in a lot more detail, and we'll be doing a dedicated analysis as to what happened during that meeting. What did the Federal Reserve say? What did Jerome Powell say? We're going to break all of that down. So hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. There is a 16% annual discount that does expire at the end of this month. So if you want to take advantage of that, we've only got 1 week left to take advantage of it. You'll get access to all the buy and sell alerts, options alerts, trade ideas, and of course a lot of other private videos, lectures, tutorials, and other benefits as well. So first things first, let's talk about what the Federal Reserve did. So they did hike by a quarter percentage point. So 0.25% was that hike, and indicating that we are increasing near an end. So that was the only big shift in the overall tone of Jerome Powell and the Federal Reserve, is that they are now approaching towards the end of rate hikes. And in the previous statements, and even up until leading up to the U.S. Financial Services Committee and the U.S. Senate testimonies in front of these two parties, Jerome Powell pretty much mentioned that we have to go higher than what we previously anticipated, and we have to stay there for longer. So higher for longer was one of the things that Jerome Powell kind of was suggesting in previous meetings and testimonies. But after the banking crisis, they have now pretty much discussed that interest rates are going to go higher, but there's only going to be some additional increases as opposed to ongoing increases. So that's a little bit of a language change, and they are certainly nearing an end. And when you think about why the markets are sold off, right? And we were live during that time. Why the markets actually started selling off? If you go over to the 5-minute chart, I know exactly what he said, and markets started rolling over. And if you haven't guessed already, I mean, it is the rate cut. It is rate cuts. 2 words, rate cuts. And the reason why for this is because this is a wake-up call for the market, that the market can't be ahead of the Federal Reserve. The market cannot always start predicting what the Federal Reserve is going to do. And now things are even worse, because if you take a look at where the actual Fed funds futures are, markets are still very much in denial, unfortunately. The Federal Reserve literally, Jerome Powell literally said during that meeting, there are not going to be any cuts this year. The cuts are not in our baseline projections. No cuts this year. Those were his words. And that exactly came out at around 2:45. I remember 2:45 to 2:50 p.m. during that 5-minute time segment. That's when he said that. And look what happened to the markets. It started selling off, recovered a little bit. And towards the end of the meeting, he was asked once again, towards the end of the meeting as well, no rate cuts is what he said, and the markets pretty much tanked even further. So this is exactly what we were talking about, in terms of a rude awakening, right? This was a rude awakening for the market. This is more of a reality check for the market, that the Federal Reserve is serious in his fights in their fights for inflation. And we're not going to see rate cuts as aggressively as what the market's pricing in. And even right now, the market's anticipating another 25 basis points, and then 1, 2, 3, 4, 5, 6, and then 7, 8. 8 rate hikes. 8 rate hikes is what the market is pricing in, even though Jerome Powell himself and the Federal Reserve themselves have suggested that interest rates are going to be 5.1% by the end of this year, or at the end of this year. They're going to stay there. And 4.3% at the end of next year. Those are the median targets. From the dot plot, you can see the majority of members expect interest rates to be above 5%, and then majority of members expect interest rates to be above 4% next year. So above 5% this year, above 4% next year. And well, guess what the market's pricing in? About a 4.25 to 4.5% this year, and by end of next year, well, down to under 3%. So that's the denial part. That's the part where the market is constantly mispricing what the Federal Reserve is doing, is going to do, and is telling us. So that unfortunately is the reason why I do think markets sold off quite aggressively, because this was not a shock for me, but this might have been a shock for the market, because again, it's anticipating huge rate cuts. Eight rate cuts is not a small. It's 200 basis points. It's 2 percentage points in rate cuts, and that needs to be fixed. That needs to be fixed, in my opinion, in order for the markets to reset expectations and what we can really realistically expect from the Federal Reserve. Like 8 rate cuts, that Fed is not going to give us that, right? Unless inflation's down substantially from these levels. So unless that happens, I think the market needs to reset expectations back to where the reality is, and of course start really going along with the Fed's own estimates, which is by the year end 5.1%. Maybe expect a couple cuts next year, but that's where I believe we should really be. Anyway, so brutal day for the markets, no doubt. All 11 sectors are selling off, so we have all 11 S&P 500 sectors selling off, except for Nvidia, AMD doing really well, still pushing higher, up over 1%. Again, this was the entire market, so financials, real estate, industrial, energy, materials, utilities, cyclicals, defenses, technology, all of them are selling off pretty aggressively. So all 11 sectors in the S&P 500 down in the last 1 week. We've got comm services, technology, energy, materials, consumer cyclicals pushing higher, but utilities and real estate kind of underperforming, and comm services and technology pushing higher over the last 1 month, and everything else is straight up down. Cocoa prices, sugar, natural gas, gold, ethanol pushing higher. We've got lean hogs, oats, coffee, and lumber prices pulling back, and Bitcoin just a little bit over 27,000, and Ethereum just over 1,700, and they also sold off on the day today. Volatility did push higher a little bit, up 4%, so we did come down to as low as 20, and then we had some momentum to the upside, so back over 22.2 levels. Crude oil is now starting to recover once again from that support of $65 per barrel, so we're back over $70 per barrel for crude oil. And we've got Ethereum once again trading below 1,800, so this right here was that previous support. We consolidated for a little while, and now we're starting to unfortunately break down below this resistance area. And for Bitcoin, we're back under 28,000, so getting a little bit of a rejection there at 28,200. So we were trading at that level for a good hot second, but then we started to roll right back down as markets rolled over after the Fed's speech. So next support really is going to be down to 25,000 again. If and when we get down to that level, that's going to be a good support for Bitcoin. Now, in terms of yields, yields did sell off a little bit. They're pushing back up. So 10-year yields are back up almost 87 basis points, up to 3.47%. And we did sell off yesterday, so TMF did actually quite well. But right now, we're seeing the yields push back higher. And talking about the S&P 500, so here, this is where we are, a pretty brutal red day. So at one point, we were pushing higher, 4,038. So intraday, the market's pretty much sold off over 2.4%. So intraday, from high to low, the markets were down 2.5%. S&P was. That's a pretty sizable move. Pretty much losing about 100 points on the S&P. That's not small. And we closed at the low of day. That's also suggesting a lot of weakness for the S&P 500. And Nasdaq here also intraday sold off a little bit, close to 3%, dropping over 350 points and closing in towards the low of the day, which is definitely suggesting a lot of weakness for the Nasdaq as well. So, next really support levels, that's going to be this right here from, again, January of 2022. We've kind of validated that resistance, which has also been validated as a support more recently. So if you do sell off, if this accelerates a little bit, 6%, 7% downside, nothing to be worried about, but that is something that we can see from the Nasdaq. That's going to be that next support level to watch. And S&P 500, next support really is going to be 37.74, in line with these levels where we have gotten validated in the past. So those are going to be some levels to watch. And bottom line is, what is the market's expectations of what the Federal Reserve is going to do? So putting it in very simple terms, Jerome Powell is telling us one thing, the market is thinking another thing, right? So, that's the discrepancy. That's the big sort of discrepancy there. And unfortunately, the market's still in denial of the fact that the Federal Reserve is going to keep rates higher for longer. And he pretty much suggested there are not going to be any rate cuts this year. Now that could change. Not saying that that is not going to change, but that is completely dependent on inflation. Fully and solely dependent on inflation. If inflation doesn't come down, in fact, Jerome Powell even went as far as to say that inflation stays stubborn if it keeps pushing higher, if it starts to accelerate again. There is a possibility where the Fed resumes rate hikes more and starts to hike interest rates even further, right? So there is a possibility for that scenario. So if you think about probability wise, this is only a 33% probability for us to see rate cuts, because in the three scenarios, inflation goes higher, interest rates go higher. Inflation stays higher, interest rates stay higher. It's only a scenario where inflation starts coming down is when Jerome Powell is going to consider, the Federal Reserve is going to consider rate cuts, right? That's only one in the three scenarios that I just mentioned. So the fact that market's pricing in that 33% scenario of optimism and 8 rate cuts is pretty stupid in my opinion. Anyway, going over to Apple. So Apple here getting a bit of a shooting star candle, so coming right back down. So intraday pretty much sold off a little bit over 2.5%. Support level is going to stay put at 157.4 now. We'll see if that level continues to get validated, or if you start to break down even further. Keep a close eye on the RSI and the MACD as well. Every time it gets overbought, it's not a surprise we start to pull right back down. Talking about Amazon on the day was also down 1.9%, so selling off back under $100 per share. For Amazon, lots of consolidation sideways, and this is still going to be that lower high for us to watch for Amazon. So this is going to be that resistance to watch for this stock. Tesla, I sold some covered calls, not today, but yesterday after a very strong green day, and those calls were up over 26% today. So again, if you want to access all the options alerts and binds alerts and trade ideas and everything that we shared with our community, link's going to be down below. We've got over 3,700 members talking about fundamental and technical analysis, macroeconomics, all those things. So again, link's going to be down below. We'd love to have you on board. Again, resistance for Amazon's Tesla, is going to stay put at roughly around $200. We got rejected at 200 today and sold right back down. Intraday, Tesla pretty much pulled back over 4.8, almost 5%. Support level is going to stay put at 176 to as low as 166 for Tesla. Talking a little bit about Nvidia here. Nvidia on the day continues to push higher. Is really defying all laws and really going and stretching its valuation quite a bit. But 1% green day, a little bit of a shooting star candle again. And it's like a blow the top off rally right now for Nvidia. So it's getting really, really risky. Just be careful if you are in this, or if you're planning to trade this, if you're planning to invest. Just be careful with Nvidia, as it can be very dangerous in terms of downside risk it carries at the moment. So resistance is going to stay put at 292. We got a gap to fill on the downside with several supports, awaiting all the way down in the 170s to low 100s. Talking about advanced micro devices, I would put AMD in a very similar situation with the RSI now overbought. So is the MACD, and the price itself coming back down under $98. Again, it was trading well over $101. I do have covered calls at close to $100. So if it trades below 100 over the next month or so, those calls will print because they will be out of the money. And I do believe it's possible. Why? Because number one, the RSI MACD overbought, and the fact that the price itself is getting up to a resistance at close to $100, $102. So it's possible that AMD starts to pull back a little bit here, considering the entire macro backdrop. And it's really about semis. Semis have been outperforming over the last few days. In fact, one of the videos that I did not too long ago, Super Microcomputer, this was like a hidden stock, like a very nice gem, because it's only $6 billion in market cap. It was not being talked about at all. Nobody's covering it because this is like a hidden gem in my opinion. And well, guess what? It's done really well. It actually just hit a new all-time high, and it's pushed up since January 30th. It's rallied over 60, almost 59, 60% from those levels. So, in my opinion, still a very quality company. I think the valuation may have peaked a little bit here, but again, we'll kind of revise our estimates moving forward. Talking about PayPal, and PayPal here on the day, brutal, down 3%, so not a surprise, selling off, with the market. And the next support really is going to be $67, $68 per share, so those right there are going to be some levels to watch. $70 is my fair value for PayPal moving forward, and we also got that lower high sitting right over here for this company. Talking about Square, and Square also selling right back down 6%. We're still in the context of this downtrend, so lower highs and lower lows, so getting rejected and selling right back down. Support level is going to stay at $58, $59. So those right there are going to be some levels to pay attention to for Square as well. I would be very much interested in a potential swing trading opportunity on the long side if and when Square trades all the way down to those levels. Talking about Meta, and Meta on the day was also down 1%. Still in a very strong uptrend. Support level is going to stay put at 198. So that is going to be a very nice area of support to watch for Meta Platforms. And resistance is going to stay put at $222. So that right there is going to be that level to pay attention to. And support level is going to stay put at 198 for Meta. Very nice uptrend still, but it is pulling back a little bit right now with the market, but still outperforming the market and a lot of its peers. Talking about Netflix, and Netflix here was down 3.89%, so now starting to rotate back higher. So this was a previous support level, which seems to be acting as a very strong resistance now for Netflix, and support level is going to stay put at 276 at the moment for Netflix. So that's going to be that level to watch. Next up, we've got Google. So Google here also getting tapped out a little bit at its lower high, and we've got a resistance sitting at 108, 109. So this right here is going to be that level to watch for Google. And right now, again, our side, MACD, a little bit on the overbought side. So it's not a surprise that we're starting to rotate back down a little bit, 1.5% down day for Google. Not a surprise because it's had very strong green days over the last several days here. So next support really is going to be down to $100, $101. This is going to be that level. And again, my fair value, I think it was closer to low 100s to as low as $90 for Google. So that's going to stay put for this company. Microsoft is also starting to roll over a little bit, only down 0.5%, so big outperformer on the day. Microsoft was RSI MACD still a little bit, overbought here, starting to come right back down. We've got a near-term target at 292, and that's also a resistance for Microsoft, but support level is going to stay put at 218, close to $220, low 200s is places where I would love to add more Shopify moving forward. Microsoft moving forward. And then finally, we got Shopify. I'm still struggling with sleep here. Only got 5 to 6 hours because I was up late last night. So anyway, Shopify here, filling this gap a little bit. And this right here is going to be that higher low that we are watching for Shopify very closely. I wouldn't be surprised actually if it does break down, come down to $40 per share, and eventually actually starts to break down even further, in the future, considering everything that's going on with interest rates. So I hope you guys enjoyed this video and a complete update, a little bit of a shorter update, but just wanted to go over, share my thoughts with what's going on. And, I'm going to do a separate video going over exactly what Jerome Powell talked about, kind of giving you guys a summary. But the bottom line is that, rate cuts are off the table when it comes to this year, and yet the market continues to price that in. So this was a bit of a rude awakening, or a bit of a reality check, think of it that way, for the market because of what Jerome Powell said. And that's precisely when the market started rolling over, is exactly when Jerome Powell said rate cuts are not in our baseline estimates for this year. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. The link to our Discord and Patreon is going to be down below. We'd love to have you on board. We've got a 16% annual discount available till the end of this month, and very limited spots available. You can be a part and get access to all the alerts and all the benefits that are included with the community. So as always, happy investing. I'll see you all in the next video.